What's up everybody? Welcome to the Stocks channel. My name is Corey, and Friday in the stock market we did see the indices going lower across the board, and we're still in very strong downtrends. Are we going to see more downside in the month of March? First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so Friday SPY was down 0.81%, and we did gap down, and the bulls were not able to close that gap. So this is more evidence that the bulls are very weak and the bears are in full control of this market, which should be very apparent by such a strong downtrend. All these moving averages are negatively sloping and they're all stacked to the bear side, so the bears are in full control. Think about the fact that the bulls couldn't even close the gap up there at 433.8, even though they had all day to do so, and they even did bounce off strong support. So there's without a doubt a very strong shift in who's controlling this market. So you need to give all benefit of the doubt to the bears because they are in full control. That doesn't mean you can't make long trades off strong support, and as you can tell, trading off 428 was still a profitable trade, but you need to respect the fact that it's a downtrend, so the path of least resistance is still lower. If you're trying to go long-term swing trades against the trend, you are going to have a terrible time, and there's no telling exactly where the bottom in this market's going to be. As you know, we have critical support levels that need to hold up, otherwise we're more than likely coming all the way down to 400 to close the gap. So those critical levels to pay attention to continue to be 428, 420, and 411. And remember, if we start getting 2 daily closes below 428, it's going to look like a very weak point in the market, which is going to significantly increase the probability we go all the way down to 400. So below 428, you really need to start paying a lot more attention to 400, even though we still will have very critical support levels above that level at 420 and 411. So it's a very strong downtrend. If that's the only thing you take away from today's episode, make sure you understand that this is a very strong downtrend, and the price action is more often than not going to trend in the direction of the trend, which is still going lower. Now, in order to get bullish, there are some bullish breakthroughs we need to see, and right now that will be price action above 439 and then above 447. If the bulls can drive SPY all the way back up above 447, the bears are going to get a lot weaker because they will lose the bear trend and they will lose a lot of very critical resistance levels that they're trying to protect. So you're going to see bears showing up at 439 and 447, and you're going to see a lot more bullish energy if we do get SPY above 447. And the next time SPY breaks above 450, I do think the bulls will be in full control. That's a long ways away, and you can't just assume it's going to happen. So each and every day you need to put in that work and watch the price action at all of these critical levels. One more word of caution is there is a possibility we do reach capitulation, so don't rule out the fact that the month of March is going to be more bloody selling, and eventually that could lead to full-blown capitulation. So even though I do have that target down there at 400, there's always the possibility we can go lower than that, so just protect yourself out there, and remember this is a very volatile market with a very strong downtrend. On the NASDAQ 100 triple Qs, we were down 1.45%, and a very similar story as SPY with a very strong downtrend and getting rejected from critical resistance levels, so the bears are still in full control. Your critical support levels in the triple Qs will be 334, 329, and then that gap closed down here at 315, and yes, we could still go lower than that. Now the bulls will start getting a lot stronger if they can get these bullish breakouts above 348 and then getting all the way back above about 360. The bears will start going into hibernation if the triple Qs bulls can get back over that 360 level, but again, that's a long ways away and the trend is still very strong in the downward direction. All the moving averages are stacked to the bear side and they're all negatively sloping. So remember, the path of least resistance is lower, even though we are coming into strong support. And remember that if you are a bear and you're getting overly bearish, try to have more of an open mind near strong support levels because volatility does work in both directions. Any of these strong support levels could lead to very strong bounces, which could lead to very strong counter trend rallies. And even though overall those will likely just lead to lower highs, they can still wipe you out if you have a short-term mindset in your trade and you're completely ruling out the possibility of upside. So just because we have a strong downtrend doesn't mean we can't get short-term bounces to the upside. So you need to pay attention at strong support and not get overly bearish at support levels. So watch these critical support levels and the critical resistance levels and pay attention to the price action. If we start slicing through support, that's going to be very telling that we're going to have a quick trip down here to close this gap at 315. And remember that the market does love symmetry. So a lot of these sell-offs have a very similar angle, which more than likely means we're going to close that gap right around quad witching if you just project out the slope of the decline, and that does take you out to about the middle of March. So it's going to be a very volatile next couple of weeks. Otherwise, you're going to see the bullish breakouts, and then we'll know this scenario is not likely going to play out. But as I always tell you, the market typically moves in the direction of the trend, and it's so very clear that the trend is very strongly in the downward direction. On the Dow Jones, we were down about 0.5%, and we did close the gap that was opened intraday. But again, you see a very common thing across the indices with very strong downtrends and price action below all the moving averages with negatively sloping moving averages. So in the Dow Jones, your critical support levels are 331.5, 329, and 322.6. Your bullish breakout levels will be back above 343.5 and then closing back above 348. Don't get bullish until we get to bullish breakouts, or at least wait till we get to strong support levels and then play for the short-term bounces. As I said many times, if you're a long-term investor, typically you just want to have very strong support levels you're accumulating at. And if you're playing the long-term game and you have many years to wait and you don't need that money anytime soon, I wouldn't necessarily focus too much on trying to catch the bottom. On the Russell 2000, we were down 1.57%, and we did bounce off of that very strong support level at 197. But again, we have the bear trend and all the moving averages are stacked to the bear side and the price action is below all those moving averages. So if we lose support at 197, you're looking for a retest of 191, and below 191, we're likely coming down to 170 with support on the way there at 183. Your bullish breakouts are going to be above 207 and then above 212. So try not to get bullish until the Russell 2000 can at least close above 207. But if you want to be a lot more conservative, wait until IWM can close above 212. On the Arkk ETF, we were down almost 5%, and we did close slightly below that level right around 60.5. So we're right back to that very strong support level at 60. Remember, if we lose this support level and we take out this low at 57, you're looking for a new low, which is down here right around $50. Your upside resistance levels will be 64, 69, and right around 78. And we really need to see the Arkk ETF at least taking out this previous high, so we need to close above 71 to start reversing this bear trend. And then you'll need the bullish breakout of confirmation right above about 78. This is a very strong bear market and a very strong downtrend. So continue to short at resistance or wait for confirmation of a bullish breakout. On the VIX, we were up 4.85%, and yet again, the VIX is closing above 30, closing just under 32. It's very clearly in a daily bull trend, and we're very clearly above our support trend line. So anytime the VIX is this elevated and stays above 30 for a whole entire week, you need to be very cautious of more downside in a potential bear market. It's very apparent with the strong downtrends in the indices and the strong bull trend in the VIX that this is a very volatile market that could have plenty more downside. So don't try to get cute with your swing trades, getting too aggressive to the long side when we're in such a strong downtrend. We really need to see the VIX getting back down below 24 and closing below 20, and that'll be confirmation that we're going back into a bull market, but you won't know that's happening until we get the confirmation. So continue to be cautious and continue to respect this volatile market. There's going to be plenty of whipsaws, and the trend is clearly in the downward direction across the indices. So respect the fact that we could be entering a bear market, and it's going to depend on a lot of the price action we see this month. In Bitcoin, we're currently trading just above 39,000, which is at very critical support level right around 38,700. If we lose that support, you're looking for a retest of 37,000 and then a retest of 35,000. If we do break below 37,000, this is going to look an awful lot like a double top, which means we're more than likely going to see a retest of 30,000. If that level fails, you're going to see Bitcoin trading at $20,000 yet again. So it's going to be a very critical support level at 37,000, so watch that level closely. And you can clearly see the bears are taking back over control, and they're just about a day away from having the full bear trend. The bulls need to get a close back above 46,000, so don't get bullish on Bitcoin until it can at least break above that critical resistance. On NVDA stock, we were down 3.28% on Friday, and you can see we're back down below that support level at 236. So our price targets are now the next support levels at 223 and then 209. If we break below 209, look for support at 197 and 192. And your bullish breakouts are now going to be above 244 and 253. And if we can get a breakout above 270 without taking out the low at 209, that will be a very bullish breakout, but we won't know we're getting that until we see the price action, which means we'll likely see NVIDIA breaking out and going back into the low 300s. But right now, respect the fact that it's in a downtrend, so focus on downside price targets until we can at least get back above about 253. On Tesla stock, we were pretty flat on Friday, but you can clearly see Tesla still has the bear trend, and it's still failing to break above that resistance level at $900, which is the confirmed double top. That means we could be going all the way down to 592. There's no guarantee how long it's going to take to get down there, but as long as Tesla is below 900, you need to respect the fact that it could be trending down towards 592. Even if it takes a month or two to get there, nobody knows for sure. Now, one thing I do know is if we do lose that support level at 700, this selling is going to pick up speed and it's going to start dropping a lot quicker. On the way there, look for support at 827, 763, and right around 709. because any of those support levels could lead to a bounce. And if we do get a bounce, you're looking for bullish breakouts above 870, 900, 920, and 937. And if we start breaking out above those levels, we should get rid of the bear trend. We could invalidate the double top and we could go back into a bull market. But for now, we're clearly in a downtrend and we're clearly failing at resistance. So respect the fact that Tesla is more than likely trending lower. On Apple stock, we were down 1.84% and we did close below all the moving averages, but we're still holding up above this support level at 162. At this point, our support trend line and our support level are almost the same level. So you're looking for strong support around 161 to 162. If we lose that support range, you're coming back down to 157 and 153. And if we break below 153, you're looking for a retest of 147. Your bullish breakout is still above 168 and you need 2 daily closes above that level. So don't get bullish on Apple until you get 2 daily closes above 168. Above 168, we could trend back into the 170s. But for now, let's respect the fact that we're in a downtrend, so we shouldn't be paying too much attention to upside price targets. On the financial sector, we were down 1.87% and holding on to that support level at 36.8, and we still do have a gap to fill just above around 37.6. The industrial sector was down 0.22%, and we did see the bullish breakout still holding as a retest of the breakout as support did pass, and we did get a bounce off that level. The next time we close above the 50 EMA, we will start to look bullish, and we could go close that gap at 106. The healthcare sector was up 0.5% with the second day in a row closing back above the 50 EMA, and you can clearly see the healthcare sector is looking a lot more bullish with a gap to fill up there at 141. The energy sector was up 2.89%, continuing to make 52-week highs and starting to look very parabolic. You could see lots of high volume buying and a very strong bull trend as we continue to break out to new highs. Your next resistance level is just $1 away, so watch that level closely. So jumping back over to the S&P 500, you can see there are a lot of bear trends across the board. Even though we do have a strong energy sector, more than likely that's hurting the S&P 500 more than helping it. A lot of that money would be better off in other sectors that have more weight by market cap in the S&P 500. You could see the healthcare and industrials are starting to look like they're getting bullish breakouts, so there could be better times right around the corner, but you still need to respect the fact that we are in strong downtrends, and you need to get bullish price action breakouts for confirmation the downtrends are ending. Watch those very strong support levels and look for the bullish breakouts of resistance and just follow the price action. Patience and discipline are going to be your best bets in a volatile market. And if you're not good at trading a volatile market, just sit in cash, wait on the sidelines until things are less volatile and there's more clarity where we're going. But never forget the trend is your friend. So if you're trading against the trend, you have the least probability chance to win that trade. So just keep that in mind. Also, don't forget that I do have Bank Trade Alerts, which is an algorithm-driven trade alert service that only trades the ETF TQQQ and sends all of your buy and sell alerts directly via email and text message. With all this market volatility in a brand new trading year, I think now is the best time to be a bank member. You can find out all of the information about Bank Trade Alerts and how to subscribe by clicking on the link in the description of the video. I also have the Stocks Channel Discord where I'm doing intraday updates and analysis and bringing new trade ideas to you weekly. So if you're interested in joining the Stocks Channel Trading Discord community, you can find out how to join the Discord server by clicking on the link below. So thanks for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.